Hi everyone, so we are talking about chapter 5 now. So out on Canvas, this is your chapter 5 screen. There's not really a PowerPoint or anything to go with it, but I have some pretty detailed notes, so you may want to print those out. This chapter is wrapping up the accounting cycle, so we're dealing with, after we've prepared our financial statements, what's left. So we've got closing entries is what these are called, and then we have a post-closing trial balance. So how do we do our closing entries? Well, there's a four-step process. Actually, I may break it out into 5. Nope, we do 4. In the principals class, I have some extra steps for them, but anyway, so we've got 4 steps. So the whole point of this is the financial statements are a report. And we need to take the information we gathered on our reports and make them official record and journalize them. So our statements are income statement, which has revenues and expenses. And then our second statement is statement of owner's equity, which has the net income or loss and the adjustment to drawing account. And then our third statement is the balance sheet. So if you think about it, your income statement and retained earnings statement of owner's equity is for a period of time. And you can tell that by the way they are titled. The balance sheet is as of a certain day, so it's got a different title. So because the first 2 statements are a period of time, we don't want to keep the information in those accounts from previous accounting periods. We want to reset them back to 0 so we know for our year how much revenue we had and how much in expenses we had and how much the owner drew out. So how we do this to reset these temporary accounts, which is revenues and expenses, and I put dividend or draw, they mean the same thing in this class. To reset them back to 0, we've got to do these closing entries. So the first entry that we have here is the revenue. You're going to list every revenue account. Since they have a normal balance, in order to get them to 0, you have to debit that account for whatever the balance is. So you're always going to debit the revenue, and you're always going to credit income summary. Now, income summary is a new account to us. It is a temporary account. It is only used in this step, the closing entry step. So you will not see it listed on a trial balance. You will not see it in a financial statement. It's only used for this process. And it does not have a normal balance. It is like the mediator to get the revenue and expenses over into your capital account. So it's just an account to help us with this process. So don't have to worry about what is its normal balance or anything like that. You need to worry about the revenues and expenses and the draw. Make sure you get them to 0. So up here, like I said, I just have the one revenue, but if you had fees earned and commission fees, both were coded with an account number that starts with a 4, which is our revenues, then you need to list both of those accounts as debits, and you would put their amounts in there. The income summary would be 1 credit, and it would total whatever your debits are, because remember, our debits and credits have to equal in our journal entries back from chapter 3. Okay, so after you've got those accounts closed out to 0, our second step is to close out our expense accounts. You have to list each expense account. You can't come in and do a credit and say expenses. You have to list each one. And the second journal entry is usually the longest because we have a whole lot more expenses than what we do for revenues. So expenses have a normal debit balance. So in order to get it to 0, you have to credit it. So that's what we're doing here, and it's whatever was left. You could use your income statement to help you, or if you have a worksheet or the adjusted trial balance, you can get the balance of those expense accounts and use them. So you can see here we have 3 expense accounts, and we are going to debit our income summary. So I got the $11.50 because it's the total of all of these credits. So remember, debits and credits have to equal. So that is your second entry. So at this point, entry 1 and entry 2 have accounted for your income statement. Revenues minus expenses leave you net income, hopefully, unless you have a net loss. So what the balance is in your income summary account should match to your income statement. So our third step, sometimes I throw in this extra. This is why I say it's 5 for the principals class, because I make them draw a T account for income summary so they can visualize you have 1 credit entry for $1,200 and you have 1 debit entry up here for $11.50. So the credit is more than the debit, so that means you have a balance on the credit side of $50. The difference between the two is your balance. So if it's a credit of $50, then in order to get the income summary account to 0, we would have to debit it. So that's what we did here. And apparently I misadded my numbers when I did something. So you would debit your income summary to get rid of it, and you would credit capital. Oh, 1,200 minus 1150 is 850. Was I thinking straight? No, it's not. Anyway, the whole point of it is income summary is debited, your capital account is credited. If you had a net loss, the journal entry flips. So the first 2 entries are always the same. The third entry is the one that can flip depending on whether you have net income or net loss. So you guys hopefully understand so far. It's a little tricky. If you get stumped on it, let me know. So at this point, we have increased our capital. It should be $50. I don't know why there's an 8. We've increased our capital $50, which is what happens on the second financial statement, statement of owner's equity. You take your beginning capital and add net income, subtract your draws, and you get an ending capital number, right? So there's half of the second financial statement. The last part of the financial statement is this step 4. So how much dividends or draw the owner took out of the account, out of the business, needs to be accounted for. So draws or dividends have a normal debit balance. So to zero them out, we would have to credit it. So that's what happened here. So we're going to reduce our capital account with a debit. We're going to reduce our draw or dividends account with a debit for how much ever it says in the problem. So those are your 4 closing entries. You only have 4 journal entries, but sometimes they trip students up. When you look at capital, do not copy the amount that's in the problem. You've got to use whatever the balance is in this income summary. Same thing down here on this capital. I have people want to use the number in the problem and not the actual draw or dividends number. So pay attention to those. After you've made these journal entries, all your revenues, all your expenses, and your draw account have a 0 balance. Those are the temporary accounts. What is left is called a permanent account, which is your balance sheet. Assets, liabilities, and you will have 1 equity account, which is the capital, and it should have a balance left in it. So when you do the post-closing trial balance, it's basically your balance sheet. You're going to put those items that still have a balance in there, and hopefully your debits and credits still equal. So that journalizes and accounts for your financial statements. Remember, financial statements are a report. These are journal entries that actually get it into the books. So this is what Chapter 5 is. And let's click over here to the homework. So the first exercise, no more blueprint problems. These are back to problems in your book. You can watch a video if you need to. But I want you to understand a real account or a permanent account versus a nominal or a temporary account. And I want you to know whether or not you close them out. So they give you an example of building. Well, building is an asset, right? So an asset is is it real or nominal? Well, it's real. It's a permanent account. It's on the balance sheet. Is it closed out? No, because it's on the balance sheet. And then it wants you to say which statement. So it's either going to be income statement or balance sheet. So you guys work through these. You got to, if you can figure out which of the main categories they go into, hopefully by now after chapters 1 through 4, you can determine which statement they're on, and then this part, real or temporary, is the new part. Okay, so for question 2, you are given accounts. You have to be able to identify which are revenue accounts and which are expense accounts and do the closing entries. You're not going to use all of these accounts. Some of them are not revenues. Some of them are not expenses. So you're going to go through and do your closing entries. You can tell revenues first. You're going to have several expense accounts. Close out your income summary. Close out your drawing. So you guys use this information. There's a video there if you need help. All right, so the third exercise. Same thing, except now it's taking a blip from the worksheet that we talked about in Chapter 4. It's giving you the accounts that are on the income statement, so revenue and expenses. And then it should tell you up here how much your drawing is. So when you do that last entry, it's up here at the top. So again, revenues, expenses, close out income summary, and then the last one is to close out your drawing account. Lots of practice with these journal entries. All right, so problem 4 is a worksheet. So you have all this data. You need to be able to know where you're pulling your information from these worksheets. So you need to prepare an income statement. So you're going to use the worksheet, and if you can see, we have income statement highlighted here. So obviously, we're going to use the numbers from this category, these 2 columns, in here for our statements. Now remember, a statement is a report, and on this report, we do not have debit and credit columns. We have a subtotal and a total column. So do not copy all of this down and think it's debits and credits. You've got to follow the format for doing a report. If you need help, look back in chapter, I think it's 3, maybe even 2 or 3, has the financial statements. So this is our first statement. The number you get is telling you it's net income, is going to roll over into our second financial statement. So you're going to use the information from the worksheet to prepare your financial statement. Also, watch the instructions. It says assume there was an additional investment of $3,000. So you guys may need that information to complete it. So remember, when you look at this capital account, this number, you can see this 14,848 is consistent all the way through this worksheet. That is the beginning capital number. So as of June 1st of the previous year, that is our beginning number. So the second statement down here, you're making all these adjustments to come up with our new ending number. All right, so fifth problem. Again, using a worksheet, except this time we don't have the income and balance sheet part. We stop at adjusted trial balance. So you need to be able to identify your accounts. And they did the trial balance, and then with these adjusting entries, they had to squeeze in some new accounts. So these are not necessarily all in chart of account order. So you need to be able to identify these new ones they added down here as to their main categories. So you can do these closing entries. Revenues, expenses, close out income summary, and then close out your drawing account. So all of that information is up here. You just need to use the appropriate columns. So remember our cycle, we make journal entries, post to the GL, then we do a trial balance. There's the first 3 steps. Step 4, do adjustments. Step 5, do an adjusted trial balance. Step 6, we would prepare financial statements. Step 7, closing journal entries. And then step 8, post-closing trial balance. So what is left in this part? Assets, liabilities, and your new capital ending balance. So since you have, you should be able to calculate all that from right here. Your ending capital account, you may have to do some math to figure out what is your ending capital account after you've made these adjustments, these journal entries to it. So do not use this number because that is not accurate, because you're going to make some adjustments to it in those closing entries. So a little bit more challenging problem, the last 2. You can tell that because they're problems versus the other ones that are exercises. So anything that says a problem up here in the description, a little bit harder to work. So that is the summary for Chapter 5. That's the overview for the homework. If you run into problems or something, post them on Canvas to the discussion where the video's at. Because other students may be having those questions too.